Okay, let's go ahead and get started here. Welcome to the MarketSmith webinar, and we are going to talk about pullbacks and when a pullback is considered a buy, hold, or sell. Quick introduction, my name is Arusha Paris. I'm one of the coaches here at MarketSmith, and let's just make sure we have the webinar software functionality down here. Okay, whenever you have a question, just use this little field. Type in your question, and I'll answer it during the presentation. Okay, and a quick disclosure here, I'll give you all a second to read it. Okay, so let's go ahead and get started and go over why interpreting pullbacks is so important. Okay, in the end, and I think this is really the best year to see this because it's been an amazing trending year. Pullbacks allow you to determine the health of a stock. For a lot of these stocks, it's remarkable at how far they have gone, right? You can never imagine that they can go this far. But if you know how to interpret pullbacks, because it doesn't matter how great the stock is, they're all going to take a rest. And so if you can understand when a stock is acting normally or abnormally, when it's acting healthy or unhealthy, you're going to be that much further ahead in the game. Now, pullbacks also give you a potential chance to buy or sell. When it pulls back gently back into the 10-week line, here's your chance to add. If it breaks the 10-week line on heavy volume, there's your chance to sell. Okay, so it's going to give you all this critical information that is going to help you make a better decision and improve your probabilities of hanging on a stock that continues to outperform, or maybe this is the time to get out, free up your money, and look for something else to buy. Now, in the end, and this is what I really love about it, is that it is an opportunity to set expectations going forward. Okay, because you know how great stocks act in great markets. And if you don't know, just review this year. Review the best stocks because this has been a great market and you're seeing a lot of these great growth stocks getting rewarded in a really great trending market. And so knowing what to expect and knowing how to adjust if those expectations are off, that's going to make you that much better in handling some of these great stocks. Okay, so let's start off with an example here. And we're going to go to Papa Murphy's Holdings, ticker symbol FRSH. And you can see this one was an IPO back in late 2014. And it started to build a space. You can see pattern recognition picking up a trading range right here. Within that trading range, it's almost, you can argue that that's a couple with handle right there that it recently broke out. Take a look at the volume, huge volume. So it's definitely a strong move past prior resistance right here. Okay, if I move my mouse here, here's your prior resistance. And this is kind of your first initial kind of resistance right there. And you can see just on this a weekly chart, really strong move up. And you can see the volume confirming that. So new buyers coming in, wanting the stock. Now the stock pulls back. And there are plenty of times when I buy these stocks, they pull back and it's so easy to get scared out of them. And so knowing when the pullback is normal or abnormal, that's going to help you. Now it's going to take some experience for you to understand this, and get this down, because pullbacks are scary, and during the middle of the week, they can look pretty bad. But it's that end of the week, the close of the week, that's going to give you some of that critical information. So here's this stock, had that really strong move a few weeks before, and then it pulls back, and notice how it pulls back almost to the top of that middle of that prior resistance area. And so I can almost guarantee you on that Monday and Tuesday, probably look terrible. It's probably right at the bottom of the range. You might even be down on, you might be even getting pretty close to that 8% on this, right? So you may have to be lightening up on some of the shares, right? But by the end of the week, all of a sudden it closes 58% within the trading range. So when we say closing range 58%, what we're doing is how far off the low of that week is it closing? And so you can see that middle bar, 58%. So these are just subtle little details, but it's going to help you understand whether the stock is under serious distribution or not, right? Whether maybe it's more of a shakeout and there's a big buyer waiting down at the lower prices to push her back up. Okay, so these are little subtle details that you'll start to pick up on the more and more you study these charts. So the stock pulls back, it finds support, and the 10-week line starts catching up to it too. This 10-week line's right here, starting to move up. And so not only is it pulling back and finding support near that prior resistance, it's also getting pretty close to that 10-week line. Okay, so in the end, even though you might have bought this, you might be down on it a little bit. When you take a larger step back, it's still acting healthy. Okay, now sometimes there'll be times where I'll lighten up dramatically out of the position just to protect myself, but knowing that I'll have to be quick to get back in if it's acting healthy again. Okay, so I'll scale back in at that point. Now, another key kind of characteristic that you want to take a look at. Remember the previous slide with the volume as the stock exploded through that prior resistance. Now it's pulling back on lower volume. Okay, so all these things, all these little characteristics, these little details tell you that this stock still is acting pretty normal. It's acting pretty healthy. Now, Paul, I mentioned it a little bit earlier, but this is a weekly chart. All of these charts are going to be weekly charts. If I had to choose one or the other, I look at both daily and weekly charts, but I always will look at weeklies first, and I try to look at weeklies most of the time for this kind of scenario right here. Because if you look at a daily chart, it's going to look really scary. But when you look at a weekly chart, it's going to give you a little bit more perspective. It's going to remove some of that noise, and you have a better chance, or at least I have a better chance of holding on to a position that in the end is still acting normally. It's just going through a pullback. Okay, so all these little details you want to just start becoming aware of because it's going to help you when you're in a good market. Now, as it pulls back, shakes out people, right? Then it kind of resumes its uptrend. So pulls back, now breaks out through the larger trading range that pattern recognition is picking up. And now it's well above, 12% from this dotted line. But if you bought it near that prior resistance area that was originally identified, now you might be up even a little bit higher. Okay, so it's up. But imagine, and this would happen to me a lot of times at the beginning. I'd lose patience, and honestly, sometimes it happens now, right? It's you're going to make these mistakes. You just got to become aware of them and try to correct them as much as possible. Strong move past our prior resistance, pull back, and then strong move again. Okay, and that's that's how stocks work. They don't go straight up or straight down. They're going to strong move up, consolidate that move, and then right when you start to give up on the stock, it resumes that uptrend again. So Papa Murphy is off. It's off and running at this point. And then, of course, once you get excited about it, it goes sideways, right? And starts to consolidate the uptrend again. Now notice, this gives the time for the 10-week line to start catching up to the stock. Okay? And pattern recognition is starting to pick up a flat base here too. So strong move, starts to pick up a flat base, 10-week line comes up. Now you're starting to see more kind of reasons that the stock is still acting normally. It's still acting as expected. Okay, so at this point, you have a nice breakout, moves up, consolidates again. Now you have another reason for support, that 10-week line. And so it's reasonable to expect that the stock should be able to break out of this, provided the market continues to act well and you don't have any major news coming out that changes the whole environment. It's expected that the stock should move higher. Now, of course, you always have to worry about earnings season too. But when you're looking at it in a vacuum on just a price and volume level, expectation is that the stock moves higher simply because it just continues to act healthy. The volume has continued to decrease. You're not seeing a lot of distribution. And so the expectation is that it should break out of this. Now, obviously, expectation can break too. But in this case, you have an earnings reaction. You went up into earnings and really powerful breakout, right? So it's always this fine balance. You always want to try to get in these stocks, hope that you build up enough of a cushion, around 10%. That's my personal kind of threshold. I like to have around 10%. If I'm lower than 10%, I'll lighten up on the position going into earnings. But this is hope, right? You have a great stock, you love the story, the fundamentals are great, and now you're up on the position around 10% or so, goes into earnings, and then bam. And we've seen that a lot this year, where you were really rewarded holding on at least to some of your shares going into an earnings report. Now, it doesn't always happen like that, right? But you just have to set those expectations. You have to try to set yourself up to prepare for both kind of scenarios. Now, of course, if you got out of the stock, or if you this was on your watches and it moved up too fast and you missed it, of course it always goes up higher, right? And you're kicking yourself. Get used to that. The markets are always going to do everything they can to frustrate you and wear you out, scare you out, right? They're never going to make it easy, and in the end, you're never going to be happy in the market. So, uh, just be disciplined and try to make money when you're in those stocks, and cash out. As long as you're making money and slowly growing your portfolio, in the end, that's the name of the game, because you continue to hang around long enough to let that, not only your money compound, but your experience. And then you keep getting better and better at this, and you'll start noticing all of these little details. So the momentum continues. Take a look at that huge volume coming in too. Okay, we actually even have the power pivot flag here, where it broke out of the flat base. It's up more than 20% in under 3 weeks. All right, so that's the 8-week hold rule. And so if you really like the story and stuff like that, now you have another reason to try to hold it for a little bit longer. Now, of course, once you get a little excited again, look how long it consolidates the move this time. Right, it's a really strong move up, and a lot of times when you have these really strong moves up, they need even more time to consolidate. And so this looks like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10-week consolidation right here. Starts to pull back. Obviously, if you buy it late extended, you're getting shaken out at this point. But when you take a step back, look at the larger picture, what's happened? You've had a super strong move up, really strong move up, and it's just consolidating that move, right? So, and take a look at the volume. The volume is tiny. I mean, it's going up on huge volume, pulling back on lower volume. I mean, it's perfect kind of action right here. You want these stocks to start going sideways on lower volume. That's really, really good action. Jeff has a question here. What percent do you hold before an earnings report? I generally will continue around 10%. If it's lower than that, say I'm up 5%, then I'll lighten up a little bit. It's not an exact science. There are those rare occasions where I think this stock is a real game-changing stock, and I'll really try to hold as many shares as I can. Sometimes I really get hit by it, but for the most part, that's kind of how I've done it, and that seems to work pretty well for me, at least. So you have to play around with that, but the one hard thing about the earnings reports in that you're not going to be able to tell in the chart whether it's really in trouble or not. I haven't seen anything kind of consistent with that. But that's kind of the percentage I use. So getting back to this, so you have this really strong move up, pulls back gently, lower volume, great action. And look at that, bam, higher volume again. I mean, this is picture perfect. If I had to draw, stock of a stock under accumulation, a stock acting healthy, it would be like this. It moves up on strong volume, pulls back on low volume, strong volume again, right? It's just kind of this kind of stair-stepping approach. But where we originally started off with the stock was around $11. I mean, it's up to $22 now, so you're almost up 100% on the stock at this point. I mean, it's a really, really strong move. Now, yeah, you might be taking 15, 20% around that time, buying back pullbacks and all that kind of stuff, right? So it really depends on how much you like the story at that time. But really strong move up. Take a look at the RS line blue dot getting a new high. So perfect action. Then it pulls back again. Lower volume. Back to the top of the base too, right? 10-week starts catching up. So it just continues. This is a character of the stock, right? Continues. So once again, the expectation here is that, yes, it should hold the 10-week line, and resume higher, right? So that's the expectation at this point. Now, eventually that expectation is going to break, and then you adjust it. But move up, consolidate, go sideways, move up, consolidate. That's the expectation. And so you have to stick with the trend until it truly ends, right? So You just have to give the benefit of doubt. In the end, especially this kind of year, that this is why all those kind of sayings, all these truisms are there, because where you start making better and better money is capturing the primary move, not the shorter moves in a good trend, right? And it's not easy. I mean, I've messed up things left and right, but then other things I've done well. You just keep getting better at it at times. Okay, so now in this case, bam. I mean, now your expectations are broken. I mean, this is brutal, but this is the market, right? It's not easy. And you're going to have things, especially for newer companies. It's harder. They have a tendency to disappoint a little bit easier, I guess. And so now it's clear that there's a character change taking place. Support is broken. So you're seeing a major warning sign here, right? Break of the 50-day and heavy volume. Major warning sign. So of course now the expectations change. Now the stock either needs to rest or it's starting a downtrend. Okay, so but it's acting unhealthy at this point. Okay, and take a look at that volume. Look how big that volume is compared to all the other down weeks. And so in this case, this was the beginning now of a downtrend, right? So once the trend starts to change, it starts to trend the other way. But notice, and this has happened to me plenty of times, where I'll sell right at the low of that week, and it comes right back up, right? So once again, you're never going to be happy, right? So, but you have to have rules to manage yourself, to manage your emotions, and in the end, as long as you're slowly growing your portfolio over time, you hang around long enough to really let that experience start to compound too. Okay, so it looks like there's some other great questions coming in here. I'm going to hold off right now. Let's get through a little bit more of the presentation, then we can come back to these questions. Let's start off with Comfort System here, ticker symbol FIX. And you can see here's a breakout from a cup with handle, a pretty long cup with handle. But the volume increases at this point and undercut the previous base. So you're probably first stage base at this time, right? So there are a lot of little things you want to start noticing. You're a pretty decent uptrend before that. And so at this point, obviously the expectation with a breakout, it should go up 15-20%. That's why you're doing this, right? Obviously, if it sells 5 to 8% below, which is indicated by the pink area down here, that's when you react the other way and you start to cut your losses at that point. So let's see what happens here. So you have an increase in volume, a pretty decent breakout. The cup itself is pretty long, but it's acting pretty healthy. I mean, when you look at the volume below, it's more up weeks than down weeks, and so it's a pretty decent accumulation, and stock takes off, right? So you're already up 16% from the pivot at this point. So it's a pretty decent move. I wish they always acted like this. You have 1, 2, 3, 4, 5, 6 weeks in a row up. So this is exactly what you want to see, right? And so the stock consolidates on lower volume. 10-week line starts to catch up with it. Okay, so far it's normal. Completely normal action at this point. And resumes uptrend. Right, so very similar to lots of stocks, how they've behaved this year. Strong move up, consolidates, strong move up. Consolidates, right? And everything's normal. So just think about how many weeks this is now, right? How many months? This is probably a good 2 to 3 months at this point. And now you're starting to pick up a flat base, 10-week lines catching up. And so naturally, the expectation is the stock should go higher. And get a breakout of a flat base, RS line, new high, indicating that's becoming more of a leader in the market, indicated by the blue dot. And should go higher at this point, right? And this one, now it's a really strong move, right? You're getting the power from pivot flag, 25%. At this point, obviously, if you want to take money off the table or cash it all in, then, you do that. And, if that's your plan, that's your plan, right? So in the end, that's where you're adjusting to your own personality. Stock comes back in. Now, this is where it gets a little scary, right? Comes back in, but by the end of the week, you start seeing buying. Start some new buyers coming in. And closing range is at 59%. Remember, it's 59% off the low of that week. So in the end, even though it was a down week, this is actually an accumulation week, because if it's over 40%, we consider an accumulation week. So this closing range is 59%. higher volume, so it's actually still acting normal. Now it forms a flat base. Pattern recognition is trying to figure out now what's going on here, right? And so even though this is a pretty rough week at this point, it's closing at the lower part of the range, it's still forming a flat base, still acting normal, still consolidating this huge move. Now pattern recognition starts thinking, okay, maybe it's a double bottom. Take a look at the end of the week here. Nice blue week, shook everyone out, right back to the top of the range at that point, and finishes positive. So now you have a double bottom, breaks out. So everything, all this time, now we're like 4 months into this breakout. It's all normal action. Okay, so there's nothing when you're looking at it by the rules, when you're looking at it from a larger kind of perspective here, there's nothing to indicate that there's major kind of distribution or major warning signs yet. Breaks out, moves up again. That was probably an earnings reaction. It is an earnings reaction. And it closes in the middle of the range, forms another base, finds support, still normal. Okay, so look how many months we are. We're probably getting close to a year at this point. Now, we get a break of the 10-week line on higher volume. Okay, so this is a warning signal, and this is a character change. Okay, so now in the end, does this mean that the stock's going to go to zero? No. It just means that the stock has been trending for a year probably, and now it's breaking. And so there's a little bit of a change. It could go sideways. It could form another base breakout and all that stuff. Or it could start a downtrend. Okay, but so we don't know at that point. We just know that there's a little bit of a character change here. And so at this point, if you're up decent on the position, you want to exit. You want to take some profits at this point, if not get out of the whole thing. If you bought out at this recent double bottom, you're probably exiting at break even at that point. So these are the things that you go to your head. But you always want to try to take a larger step back and say, okay, from an objective point of view, is it acting healthy or not healthy? Obviously, once you have money in it and where you buy it, that's going to influence your decision. But ideally, you want to kind of take a step back and look at it just from more an objective point of view. I know it's really hard when you're in real time there. Now here, it didn't go to zero, right? It just went sideways for another year, right? So that's why we do this, because we're looking for those character changes to see when the trend is going to pause, either end or pause. Now, if you love the stock and stuff like that, in the end, you end up tying the money up for 10 months at this one. Maybe we're in a bad market or whatever, or maybe there are other stocks moving, right? So we always want to try to be in these stocks when they're acting healthy, when they are in an uptrend. Now, Steve is asking, is this a fourth stage base? I think if you're asking about with Comfort Systems, I don't have these are screenshots here, but what I'm seeing is it undercut this flat base here. So I would call this a first stage base at this point. Okay, let's go to one more example here. Calmain Foods, ticker symbol CALM. Okay, Steve, if it was Papa Fresh, we can go back and take a look at it. Okay, so you can see the stock building a cup at this point. Take a look at the volume, a really nice volume. Now, immediately I can tell you this is a slower mover, right? Maybe it changes character here, but the expectations are this is just going to be a little bit more of a plotter. It is a food stock and stuff like that. The relative strength line is kind of flat. You can just take a look at just by looking at to the left of the chart. You can learn a lot about the character of the stock, and once again, expectations. Pullback on lower volume, it's starting to form a handle, and then you get a breakout. Volume increases, blue dot indicating an RS line hitting a new high, becoming more of a leader in the market. And now this is where it gets really frustrating, right? Stock it breaks out, you start thinking it's ready to go, and then it pulls back, right? It hasn't done anything wrong at this point, but it's frustrating the heck out of you, right? But all it's done, it's pulling back on lower volume. 10-week is picking up, catching up to it, providing support. Now, you kind of have to expect this because it is a food stock at this point. That's going to kind of do the same thing. Let's look at a daily chart. So there's a daily chart, and you can see I've highlighted with these arrows here some really big up volume on the day, and then it kind of went sideways, formed a flat base, and the volume decreased. So in the end, even though if you're frustrated, the stock is still acting normally. Let's go back to the weekly, and then it resumes the uptrend. So after wearing, this is a wearing you out kind of stock, right? You're worn out, you give up on it, and then bam, takes off on you. And look at that. Now the trend is really starting. And so it's very similar to this kind of trend right here, right? So there are parts in its character where it can trend for a little bit. And so you can see a nice trend at this point, and then it breaks on heavy volume, right? That was probably an earnings report, I'm assuming. Break on heavy volume. There at that point, it's a sell. So here, the expectation side is go lower, cutting your losses. I always like to, you sell and then you see what happens, right? And if it recovers, proves itself again, then maybe I buy it back. If not, okay, at least I freed up my money and I'm not, being caught in the stock too. But at this point, now it's acting unhealthy. Character change, breaking key support area, and the volume is much higher than the previous weekly volume. Oh, but as we all know, the market doesn't always do what we expect it to do. So this is kind of a key concept that I wanted to highlight here. Even though you're following the rules, you get out at that point, and I will 100% of the time get out, and I'll go back here. I would get out at this point, right? I mean, there's so many things here that would get me out, and I'd be actually following the rules too, right? It's not emotional. I'm not just getting scared out because I'm getting scared out. I'm following the rules, being disciplined. I'm selling at this point. Now, what's your expectation? It should go lower at this point, or it should go sideways and stuff like that. The fact that it kind of recovered the next couple of weeks and went higher, that starts to break your expectation. So this is where you're kind of you need to be flexible. This becomes more of an art than a science. They don't always go the way traditionally the stocks go, right? Sometimes they're going to kind of throw these curveballs. And so this is a good one to kind of study, where it kind of just makes you think it's going to go one way, and then all of a sudden it doesn't act that way. And so you break expectations, and so you have to kind of change your mindset and say, maybe I'm wrong on the decision. Maybe I need to adjust. Okay, and this is a food stock. A lot of times, okay, whatever. I got out the food stock. But if you're in some of these high flying stocks or technology stocks that are game changing stocks, then that's where you have to be a little bit more nimble, because you don't want to lose out on that. Because those are the ones that have real chance to run. Now, of course, you're going to make mistakes left and right on a number of these, but this is one thing that I've learned. If the expectations are broken, you want to reconsider it again. If it starts getting above the 50 and starts to act normal again. And so this one, after a few weeks, it started to act normal again, right? It came back up. It started being above 50. At least you can manage your risk at that point. Now you get another sell signal. So at this point, you have to sell again, right? There's no questions asked. It breaks through a higher volume than the previous time. And so now in this case, now it starts to act as you expected. Kind of went sideways, starts to struggle again. Okay, so I just want to throw that curveball just to make you aware that they're not always going to go exactly how you expect them to. And so down the line, as you get more experience, if you're newer to this, that's where you start to, you have to be flexible to adjust, especially for some of these really fast-moving growth stocks. Okay, so that's it. So get familiar with these pullbacks. In the end, it's just going to give you another gauge on the health of the stock. It'll allow you to identify places to add to stocks too, right? I mean, that's kind of just been a really nice point. Even these great stocks, some of these stocks that have gone on these great runs this year, they've given a number of times. They came back the 10-week, give you a chance to add more to that point. And then, of course, if they break on heavy volume, then you have to use your sell rules too. But in the end, always know the expectations. What's the expectations? And then know when to adjust those expectations, or realize that maybe that expectation's wrong, and now I have to come up with another kind of trading approach to it. So let's go over some Q&A here, and I'll put up the contact information, and just give me 1 second and just go through some of the Q&A. Okay, Steve, let's first go. Oops, I'm gonna just hit the back arrow here, and let me just go back to fourth stage base here. Okay, Papa Murphy's. First stage, at this point, I'm not sure if this went up 20%, but I'm going to assume. So this is probably, it's a third stage base, right? So let's say this is the first stage, second, third stage. So that's probably third stage base. It is a later stage base, right? So there are always more risks with that. Doesn't once again, expectations are they're not going to work as well. Sometimes if you're in a great market, they just the later stage bases work really well too. Okay, so uh, that's okay. So we got that question out the way. Let me just move it back to the contact information, just in case you're writing that down. Okay, so let me go through a few more of these questions here. Yeah, Carlos, he asked a good question. It's a 50-day moving average more conservative to determine when to sell relative to applying the initial sell rule at 7-8%. Yeah, I mean 7-8% kind of overrules everything, right? You never want to try to let any of your purchases go more than 7-8%. So if you're hitting that, then yeah, you're not waiting to the 50-day. This is after you're kind of out of the gate, right? Now you're up and running. You really like the story. The stock has great fundamentals, and you think it's a game changing stock, and you want to try to hold it for a little bit longer. Now, a lot of times, if you're up 15, 20% on the stock, you want to be taking a lot of those all off the table too, right? Or taking at least some of it off the table. But these are like for the ones that if you want to try to hold it a little bit longer, then you can use the 50-day moving average or the 10-week line on the weekly chart. Marsha, the big volume day more important than the big volume day. I'm not sure. Yeah, when the stocks break out, you want big volume. If it falls through the next day, yeah, that's great too. But where you're making the decision, ideally, is as the stock is breaking out. But the kind of larger concept here is you want the stocks to go up on big volume, kind of pull back on lower volume at that time, and those are stocks that are acting healthy. They're not always going to go up on big volume, but where volume is critical is at those breakouts. At least for me, I like those really big volume breakouts. If I'm going to buy a breakout, I want huge volume. Tommy, I'm used to the bar charts. That's how I train my eyes. That's how all the stocks candles. If candlesticks work for you, that's great too. But I use bar charts, so I don't. There are many different ways to make money in the market. In the end, just be consistent with your analysis. How much weight? Is asking how much weight do you give to industry group rank? I give it a lot of weight, but is that a showstopper? No. If the industry group ranking is over 100, it doesn't necessarily mean I'm not going to consider the stock. I just need that many more positives in the stock's favor. Huge earnings, huge sales, powerful breakout. If it has enough of those stuff, then I will take a shot, and manage my risk at that point, knowing that the odds are a little bit more against me because it's in a lower industry group. Ali is asking, when reviewing the big movers where you need to hold for the bigger gains, it seems like there are periods where it drops more than 7-8% before continuing to go up. Where the 7-8% rule applies is at your initial position, right, out of the breakout. If it goes down 7-8% at that point, then I'm gonna cut. Now there are plenty of times where they'll come back up, right? And so then if they do come back up, now I'm gonna adjust my expectations and decide whether I want to try it again. But if you're out at the gate, if you're up like 15% of the stock and now it pulls back 7-8%, yeah, if it's still acting normally and I really like the stock, I'm going to try to give it a little bit more room at that point, ideally, right? But yeah, so just because it's not always 7 to 8% off your the 52-week high or anything like that, right? That 7 8% rule really applies to the breakout. Does O'Neill recommend selling the stock if the price does not increase after 8 to 13 weeks? Yeah, it isn't a blanket statement. It depends. We're in a market like we've been in this year. Yeah, it's a relative strength kind of. But you want to try to be in stocks with a lot of with relative strength, right? That continue to outperform. If you're not in those fast moving stocks and you're giving it a little bit more time, there's opportunity cost there. So it's you might be in a still a good stock. You just might be take a lot longer, and you're missing on some other ones, right? So you just got to think about that. Uh, so it's not a vacuum. If you're in a slower moving environment, right, and that stock you're giving a long time to, is actually still near new highs and outperforming all the other stocks, so they're hitting lows, then you now you're still in one of the best performing stocks. So it's not a kind of a blanket statement, but in the book, I've seen in some versions it says 8 weeks you want to try to give it, or 13 weeks. But relative strength is I think trumps that. If you have to choose between 10 great stocks and relative strength, the ones that are really starting to move and hit new highs consistently, you want to try to be in those ones a little bit more because the market's rewarding those ones, not necessarily the other one just yet. Okay, Rajiv is asking about stop losses and healthy pullback. Yeah, yeah, healthy. I'll make this clear to everyone. If once you're out the gate, a stock can pull back 10%, right? Say a stock goes up 20%. If it pulls back 10, 50%, guess what? It's making a flat base at that point. So they are going to pull back at that point. Now, am I always going to be in them at the ride them through a base? No. Sometimes I'll take those gains off or take some of the gains off, right? So you gotta kind of manage that, still be healthy, but it could just be building a base. Now, the halfway to recession territory, we only apply that 10%, the recession kind of stuff, more on the general markets, right? Not necessarily. If we're in a recession or a big correction, our stocks are going to move like 3 times faster than the market. So if we're in a bear market where the markets are down 20% off their high, right, our chances are our stocks are down like 40, 50%. Right? So that's why we use those sell signals all the time. Because by the time you realize you're in a bear market, it's too late for a lot of our stocks. They're already down 50%. Okay. Sydney, yeah, whenever the expectations are broken, you go back, you adjust it, you take a look, and if it's above the 50-day and all that stuff, yeah, that's where you kind of get in the fine points of whether you buy back or not, where you scale in. Those are things you have to kind of play with, but you have to get good at the analysis process too, because sometimes if it's a stock breaks on heavy volume, now starts to come back above the 50, but it's lower volume, that's not necessarily a healthy action at that point, right? So you want to get good at analyzing normal, abnormal action. David, I can't answer specific stocks. Okay. Thanks, Mike, for joining us. Moving average that I'm using, Steve, for during the pullback to sell. The key classic ones: the 50-day moving average on the daily chart, 10-week moving average on the weekly. Frank, if you have questions about the base stage counting, we've done a base stage counting webinar, and so definitely go and look at that. We go into detail on all of how that works. Okay, Phyllis. Yeah, I'm glad you wrote those notes down. Yeah, keeping notes, and some of our customers were in some of these stocks that I went over. Yeah, keeping good notes and stuff like that. That's going to help you learn from that stuff, right? And I've done that 100 times, Phyllis. So don't worry about it. Yeah, getting stopped at small losses here and there, and then the stocks going in these long runs. That's part of the process of learning from the mistakes. Steve, with how much profits you take on a pullback, I don't have necessarily anything define like that. There are a few things that I really define, like the breakouts and all that stuff. A lot of other stuff, there's a lot of gray, right? So you got to kind of figure that stuff, what works best for you. There isn't. I don't necessarily have like how much profit I would take on a pullback on that. It just depends at that point how much I like the stock and company. Do I ever add a position on a pullback? Yes, I do add that. That is when it pulls back the 10-week line. Yes, that is an add point, and so I will add if I really like the stock. How do you stick with positions when you're up 60%? Well, that's a great problem to have, Joe. So good for you. Uh, yeah, I've done that. There isn't a perfect answer to that. Now, obviously, they always go higher after you sell them, right? So in the end, you're never going to be happy. So just make money. Thanks, Phyllis. Let's see. When you enter into a position, do you enter a stop loss at the same time or another time? A lot of times I will. Yeah. So if I'm not at the computer and stuff like that, I will put those initial stop losses. The key kind, David. I'm looking at your when would you follow up with when we buy it and sell it. You know the breakouts and when it's sell breaking heavy on heavy volume, the pullback. Okay. All right. It looks like that's the. I think we got all the questions here. So these are great questions. So thank you for asking them. Let's see, George. Yeah, George, you bring up a point. He's asking why do you stay in stock during consolidation phase versus using capital for other bonds. Yeah, that's why we have that take profits at 20%, right? Because a lot of times when you're around that point, they have a tendency on average to pull back. Sometimes they go up 40%, right? But you're freeing up your capital. So that's where the art comes, figuring out what stocks work best for you. Because there are some stocks you might have a really big time stock, so you want to try to hold on to some of those. Other stocks, taking those profits, now you're freeing up the money to try to get another stock. So it's that's where we can only make it black and white for so much. That's where it becomes more of the art. Wow, there's a lot more questions here. Okay, no, we haven't updated that part on the site yet, just yet, Jason. Oh, Susie asked a good question. You sell midweek on an 8% loss or at week's end? 8% loss. If it's 8% loss, I don't care if it's on a Monday. That's where I'm cutting my losses. Now, if it recovers by the end of the week, then you can try to figure out or keep it on your watch list and let it see if it does something back above the 50 or whatever. Steve, I'm just using 8%. I'm not taking into account the volatility of the stock and stuff like that. But in the end, if that works for you, because that makes complete sense too, I just try to keep it as simple as possible. Marsha, if the stock breaks on heavy volume below the 50-day moving average or that 10-week line, that's a big warning sign. That's a sell signal right there, right? If it doesn't and it's lower volume, that's a hold. Okay, but it also depends on now. If you're at 20%, maybe you're selling, you're taking cashing in the profits at that point. Okay, so go back over the kind of the basic kind of stuff too, to get those kind of basic rules down. David, I'm not sure where that is. That chart you're asking for. It's you have to go back in the webinar and take a look at that. Okay. All right. Thanks, George. Okay. Thanks, everybody. Great questions, and we'll all talk to you again shortly. Okay. Thank you.